Hello everyone. Hello dear friends. Basically, we've been together for years. So a swing trading strategy webinar today. I have gathered 5 of them, and if we have time, we're gonna see some more as well. So yeah, hopefully you will like what you will see today. What else I wanted? So as usual, guys, I would really appreciate a quick feedback regarding the audio of this session, and anything you need, I'm here to help with anything, to have a reply to questions, to reply to anything that you don't understand. So I need to go through the disclaimer warning as usual. Okay, anything you need, I can see the question. I will be able to see the question box. Thank you very much, Sabina. Welcome. So guys, let's do this. We have plenty to cover. This material is provided as general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are so responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved. Take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find all the necessary documentation in our website, including the risk risk disclosure as well. But even if there is anything that you cannot find, please don't hesitate to contact our support team in the online chat box that we have. So they are more than willing to assist you. So let's move on. Let's move on. Come on. Okay, webinars@agefm.com. Our let me just have a laser. Webinars@agefm.com. Our email address for anything you need. So I'm gonna skip myself. Okay, perfect. We are good to go. So what we're gonna see today, basically, because I don't know let me see a bit the names that we have over here to see whether okay, I can see new people, but I can see also people that they are consistent, they keep coming to our analysis. Okay, so we're gonna go through what is swing trading basically. First of all, what is required. So we're gonna see liquidity and time frame and why you need to be systematic in order to be a swing trader, or in order to apply a swing strategist, why it's so important. And we're gonna go through also swing strategies. I wrote it should be 5, not 6, my bad. Okay, let's move on. Okay, perfect. So let's start. First of all, before I start with the swing trading, I would like to go through these words. I don't know how many of you recognize him. How many of you recognize him, guys? All right, does everyone know about Trevor? Mr. Trevor? He's a master, a grandmaster, I will say, of technical analysis. We are referring to a huge and rich and in-depth experience of the technicals. He's has more than 40 years experience in the industry. I think so. I think it's more than 40 years, 40 in the financial industry. But he's an expert, especially in the quantitative and technical analysis. He entered the financial industry back in the 1974. So it's nearly, actually it's 50 years now, 50 years. And he was a commodity trader, a soft commodity floor trader. So this is how he started his career. So as he stated in one of his speeches, let no one kid you that you can listen to a free webinar and be given the Holy Grail. There is no Holy Grail, just education, discipline, skill, and hard work. No matter how many webinars you attend to, how many seminars you attend to, how much material you will read, you need to also try to control your emotions, be disciplined, and hard work is a must. Okay? Because everything moves forward, things are getting more and more advanced day after day. The technology is running, literally running. News never stop, but as we have seen the experience the last 4 years, as you experience, I think you experience it, guys, everywhere, everyone in the world. It was okay, other than the COVID, two wars in Middle East, and which is escalating day after day. Ukraine with Russia. I mean, it needs a constant work. It needs constantly to try and keep yourself up to date. But not only that, you need to constantly learn. You see AI. I haven't even touched that. I haven't even touched that field yet. I mean, to start educating myself as well, to find out how the AI could affect the financial industry, whether there are any new tools over there that can help us. I mean, it's a hard work, a constant work, okay? Like everything in life, everything in life. So well said by Trevor Neil. So let's move on. That's just something to start the session that I liked, so that's why I wanted to share with you. I have it actually on my swing trading strategies. I had it in the past. I keep having it. Okay. So let's start with what it is. Over here I have a very, very brief explanation, but I want to take it step by step, okay? First of all, what it is, okay? Swing trading is a strategy, obviously, right? But the aim, what it targets, is to help the trader to take advantage of price movements or swings in the markets. Okay, so It's a strategy that has been designed for this particular reason. So what we mean by swings, first of all, we are referring to okay, the ups and downs, obviously, that the market is moving, but the swing, how you can, what that the swing trading strategy involves is basically to spot when to buy or sell an asset before its value make the next substantial move, before closing their position for a profit. So let me actually, that wasn't a, let me be more precise, okay? Let me be even more precise. Okay. It's a style, let's say, okay, that in which if you apply it to your daily routine, basically you try to capture any short to medium term gains in an asset over a period of few hours, few days, or even several weeks. So that's the goal. The goal is to, by using technical analysis, to spot, to capture any short-term trigger points that will lead to medium-term gains. Okay, so just to give you an understanding, so swing trading, basically, by using swing trading, sorry, it means that you are holding a position for 1 to 3 days the maximum, okay, like I'm having on my slide over here, either long or short, it doesn't matter, okay? So as long as you hold it for more than one trading session, up to 3, okay? If you are a long-term trader, you might hold it for several weeks, but not longer than that, okay? If you are an intraday trader, you are holding it for some hourly sessions, even a day, okay? So holding a position open for more than one trading session, okay? And during this time, you will try to spot any extra swings that could indicate that your position could be held for longer. So the aim is to profit from any swings that you might spot. Okay, I know that now it doesn't sound clear, okay, but I believe with the examples and as we move on, you will understand what is this refers to. Yeah, so think about any change of a trend, of an overall trend, or any change of the intraday direction, any change of the direction of the intraday of the intraday time frame of the overall trend, any change in the price action could be a trigger point in order to enter the market and apply a swing trading strategy. Okay, so the only requirement is to be in a relative short time frame. If no maximum that, no more than 3 days. Okay, no more than 3 days. There are some swing trading strategies that might help for 6 days, but or a few weeks, but these are very strategies that are long-term ones, okay, different approach. We still call them swing trading strategy, but they are more for investors, for long-term traders in general, okay? So I'm not gonna present something like that today. Today I focus a bit on the short and medium term time frame, okay? Plus a requirement for swing trading strategies. As soon as the trade, even if the trade remains profitable, it should close after that particular time period, okay? Unless if the momentum is extremely high and support that it could last for longer, okay? But usually there is a very specific rule regarding the holding period. Nonetheless, we're gonna see everything later on. Also, something that I would like to clarify. It's very, very well known that is a strategy that it is working perfectly or very accurate if you prefer, if we have a liquid and volatile market. So that means Forex. Forex is the most liquid and volatile markets. The commodities, for example, are not as liquid or volatile as Forex, right? Stocks are the same. But yeah, Forex for sure, plus it is also applicable for stocks, but in general, it works better with liquid and volatile markets. Okay, so let's finish a bit with this intro. Why it doesn't move on? Come on. Okay, perfect. So what we have over here, typically used for daily time frames, okay? But that's why I clarify, we're gonna see today short-term time frames as well in intraday time frames. That doesn't mean that it cannot be applied intraday, okay? By the way, for anyone that is interested on a daily time frame, or if there is any one of you that is a day trader, have in mind that the entry and exit level will be identified in shorter time frames than the daily chart. So that means 4 hour or even in 1 hour time frame, okay? So the entry and the exit should be taken based on the short-term time frame. So the three most important points for swing trading are obviously the entry point, right? The stop loss, the price forecast, so the target, right? Plus the Fibonacci, the technical analysis that we're gonna use. There are 5 strategies, as I said. One of them is Fibonacci technical analysis, the other one is parabolic SAR, the other one is Bollinger. So regardless, whatever you're gonna try, these are the four most important points on the chart, right? Entry point, stop loss, target, and the levels that you will identify based on the on your analysis. Next. As I said, okay, I have put on that there is not for anyone that is a mean reverting day trader or a long-term investor, but I have seen some strategies that are referring to long-term investors. So, okay, that doesn't affect us, but it's not a rule, let's say. Okay, basically more on this one is gonna be in the next month schedule, not tomorrow, my bad. But yeah, also the trend is is a friend, right? So for anyone that is interested on find out swing trading strategies for higher time frames, such as weekly and monthly, have in mind that they are in line with trend analysis, okay? So what else? Okay, we covered that. Let's move on a bit. I'm gonna move on. Okay, guys. Before I start with the strategies, as always, if you are not systematic, right? If you don't have a system, basically, a plan, a strategy, a trading journal that you will update day after day, then forget about it. You cannot do it. Like everything in trading, right? It needs discipline, consistency. It needs constantly to update your system, to update your trading journal. It needs a system. It needs it needs a system, basically. I don't know how to say that with other words. Okay, be as systematic as possible, as I said over here. Have a system, trade your system, accept any losses if something goes bad. It's okay. It's okay as long as you evaluate it afterwards to see why it went wrong. Have I did something wrong? Is there a lack in my system? Shall I improve something? Shall I change something? Why went wrong? So accept your losses and find out why it happened in order to improve your existing strategy and your existing system. Back your winners, of course, and repeat. This should be your #1 system day after day. Okay? Updating your system, accepting your losses, evaluating your losses, right? Adapting your system accordingly, and repeat. Okay? Especially for swing traders, this is a must for everyone, I believe, but because the job of a swing trader is to determine whether an asset value is likely to rise or to fall, basically to predict that is likely to rise or fall before taking a position. Okay, this requires a lot of consistency and requires a lot of adaptation day after day, evaluation day after day, okay, because it's like predicting the next move and he needs to predict it correctly. So any profit that the swing trader has is because he was able to correctly predict the market moves with regularity. Okay, so it's a difficult strategy. It's not easy. Okay, and sometimes it's against the overall trend because you might see swings that they're just short-lived, against the trend, short-lived corrections or pullbacks and etc. Okay, so swing traders this is what they try to find out. They try to capture the next possible market move. So they trade basically on the assumption that the price of the asset doesn't grow linearly. Instead, as you already know, prices go through many pips, troughs, during an hour, during a 4-hour session, during any trading session, etc. So in contrast, I think Michalis presented a webinar in the past. I think it was the last in August or sorry, in September or in August. I don't remember. The swing trading and against the day trading. Okay, there is a fine line between the two. a very fine line between swing trading and day trading. The key difference between a day trader and the swing trader is that the day trader will open and close its position within the same trading session, right? Within the day. It opens it at the start of the day, will close it at the end of the day. Within the day, he will open and close its position, right? Because basically his goal is to extract small regular profits, right? He doesn't want big gains. He wants small but regular profits from the market moves. Swing trader, on the flip side, tries to basically tries, as I said earlier, to hold positions. So that means, even overnight, in order to catch the full value of what he predicted. Also, something that is a key difference as well between the two types is that the day trader may be able to trade with a margin 4-1, okay, but the swing trader will be offered less of a margin. For instance, it might be 2-1, okay, because they have that the holding overnight nature as well, which is a bit unpredictable nature, as you know. Now, what makes a good swing trader? The heart of a good swing trader is to be fully, to be aware, to be an expert, that's the word, an expert of technical analysis and how to read the charts of an expert of price action and technical analysis. Okay, he should be able to play this on the fingers of his one hand, as we say in Greek. So he needs to be expert. He should be well aware of technical analysis, how to read the candles, how to read to spot candlestick patterns, candlestick formations. He can recognize what is the difference between a retrace or a reversal, to understand and identify a trend and to avoid trying to fight or go against the trend. Okay, that's what makes a good swing traders. Also, system. I don't know how many times I should say it. In order to be a good swing trader, you need to have a backtest system. Okay? Always your system. Don't blindly follow other people. We present all these webinars in order for you to learn as much as you can, but in order for you to create a system that works for you and satisfies and suits your personality and your time frame. Okay? Remember, as I keep saying, you might have just an hour to spend every day in the markets because you have a second job, a third job, and etc. You have family. Each one of us has a different daily routine, right? So, and different personality, different likes, dislikes, etc. So you need to have a system that works for you, particularly for you, for the time that you have to spend in the markets, for you, that satisfies your personality. Anything that you use in your strategy, you should be expert on them. Even if you use trend lines, even if you use Fibonacci's or oscillators, you need to understand them. If you don't understand them, don't use them. Simple as that. Also, accept your losses. I already mentioned it several times. Accept it, stop it, evaluate it, find what's wrong, what went wrong if something went wrong, because sometimes it's just the news and just something sudden happen, and that's a part of our lives, right? But if it's something indeed that it was an error from your system, or from, I don't know, from you might misunderstood something, you might weren't careful enough, you might read something wrong, etc. Accept it, move on, evaluate it though, to make sure that it's not something that it's something that if it was an error, I mean something that you have to change, that it will not happen again if you change your system and adapting it. If it was an error, let's say, so do it, evaluate it, find out what went wrong. If it's something that requires a change in your current strategy, adapt it. So, and always the most important, actually the number one, should be to find out yourself, to understand yourself, in order to manage and control yourself as well, because as human beings we're greedy. Unfortunately, we're very, very greedy. So a vital step is this is a vital step for risk management. If you ask me, I will say, first of all, work on yourself, understand yourself, in order to make sure that from a risk management perspective, you reach to a level that you are confident enough and you can control your feelings, and then move on with the technicals, with systems, with practicing day after day. The most difficult part in everything, basically everything in life, not in trading only, is to control our emotions and to understand ourselves. Okay, it's not easy for any one of us to understand if it's greedy, if it's I don't know, any disadvantage that others see on us. It's very difficult for us to accept it, to acknowledge it first of all, and then accept it and try to improve it. It requires hard work. Now let's move on. Okay, I spent 30 minutes. Never mind. Okay, I'm sorry, guys. I just keep talking, and never stop. So let's start with the basics. Let's start with the easy stuff. Okay, let's start with the very first swing trading strategy, one of the most common one, I will say. And it's a combination of simple moving average with RSI. Okay, so remember, RSI it's a ranged indicator. So with a score, remember, with a scale from 0 to 100, any asset above any release, any reading above 70 or higher indicates that the asset might be overbought, and anything below 30 is deemed oversold. Simple moving averages, on the other hand, they are moving averages, basically assessing and giving us the average value over a period of over a set of time frame, okay, based on the closing price data. Basically, it helps us, especially the simple one, it helps us to visualize the average value for a particular period of time. If it's we are in a daily time frame and we have a moving average, a 20-day moving average, for example, so it means that it gives us the average value for the past 20 days. Okay, so yeah, it's plotted in our charts, as you already know, in a line graph, as a line graph, and it follows the movement of the asset. So it's useful for many things. It's useful for spotting a trend, for confirming a trend, for spotting a reversal, for find the support level, or a trigger point, basically, not so a support level, as long as it's a trigger point, basically. Sometimes moving average are used for sorry, sometimes are used for spotting some the change in the momentum. Especially, I don't know how many of you have seen our 5 and 9 exponential moving average setup. Basically, the crossovers between two moving averages points help us basically to spot a change in the asset's direction. So if, let's say, the 50-day moving average crosses the 100-day moving average upwards, that means that in the near future, this is a bullish sign. Okay, so if it's downwards now, that signals at the start of a potential bearish trend. Okay, so let's move on now for swing trading. If the very first swing trading strategy involves simple moving average and RSI. Okay, so the trend is determined by the simple moving average, and any pullbacks that we might have will be determined by the RSI in combination with the simple moving average. But yeah, so suggested period is a 7-period settings in the RSI. Okay, overbought and oversold should be at 35 and 65 instead of 30 and 70. Simple moving average should be set at 7-period simple moving average. Okay, so with this setup, if basically you can open a long position if you see the asset moving above the 7-period simple moving average, and if and only if the RSI is also above the 35. Okay, a second buy, a second long position, or if you want, you can add on the existing long position. It will be if the RSI moves above 50 as well. Clear so far? Is it clear, guys? Are you okay? With me? Are you with me? Also, an even greater, something that could strengthen even more the position, it will be if you have a nice full body candle, strong candles. But this is not a must, but for sure this is something that could indicate that the move will last for longer. I should update my slides. These are comments that I put in the past. Okay, so yeah, candle size and wicks matter. Okay, the bigger the size, the stronger the signal. Ella, 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 Ella. Guys, can you hear me? I'm sorry, the PC just went off, completely off, switch off, basically. Apparently it was a very sensitive cable. Yeah, just went off. I'm really sorry. I'm back. Let's continue. Are you all with me? Hopefully you are. Now I don't know how I'm gonna do the recording. I might try. Hopefully the recording was saved. Guys, I'm sorry. William, I can see that you're facing some problems with the deposit method. William, I cannot help on that. Can you please, we have a chat box, live 24/5 on the website. Oh, sorry. I think we left everything here. Okay. Yeah, I please contact your agent and also your agent and also the online chat that we have in the website. So guys, if you visit the website, okay, and I think we upgraded in order to help you even more to find an easily an agent to help you. So here it is. Sorry, here it is at the very bottom. Can you see it? No, you can't. Wait. Laser. Guys, can you see at the bottom of the HFM page, the HFM website? Over here at the very end, the left hand side, right hand side at the very bottom here, live support. Okay, can you see that? Dear William, please fill in your name, email, and phone number, so this will connect you with an agent, and he will be able to help you. Okay. I can see that it was an available service, but I don't know about anything about it. I'm sorry. I'm sorry. So now let's move on. Are you okay with all these messages? I couldn't see all these messages. For God's sake. Okay, so yeah, are you okay with the long position? Also, a must for that particular very first strategy is the stop loss. Okay, we said about RSI, we said about the moving average. An advantage will be if you have good full body candles as well. And also a must would be to have a trailing stop. Okay, you can use a trail stop with the lowest low of the last 5 candles. So go backwards, check the lowest wick tail bottom of the previous 5 candles, and also the lowest low of the last 2 candles for your second purchase, if there will be a second purchase. If there isn't a second purchase, so keep the stop loss on the previous lower, on the last 5 candles lowest low. Okay. Reverse for sell. Some variations that you might want to try. Why? Hello? Hello? Guys, can you hear me? Joel says that he can't. So I will appreciate the confirmation. So we're saying some variations that you might, okay, thank you, Manuel, thank you, William. So maybe it was when he couldn't, when my PC switched, turned off, I don't know. Okay. So some variations that you might want to try as well is to try to open the position on stop, so above high of RSI signal bar. Okay, but so to buy on stop above the high, as I already said. And you can, first of all, because I don't know what kind of assets you are trading, sorry, try this setup first, test it several times before you move on to a live account. If you want, you can try some different variables, but because if it's for a short-term time frame, that's why the strategy requires a 7 simple moving average and a 7 RSI is for a short-term time frame and a daily time frame and an intraday time frame. So try this on first and before you try anything else. Okay. Yes, we have an example. Don't worry about it. Also, just to so if you're looking also to find a move against the trend, okay, then just in case that you've spotted anything that is against the trend, okay, then you can enter a trade, you can take an entry if and only if it's a good candle, a strong candle, okay? But also you need to follow the steps that we said. Remember, RSI, if for a long position above 35, for a short position below 65, if you want to add on your existing position requirement, it is a crossing above or below the 50. Always, so your trade should be trade using 2 stops to exit in order to lock your profits, okay, and to limit your losses with this way. Remember, so that we said that you can have 2 trailing stop losses, okay, one at the lowest low of the last 5 candles and one at the lowest low of the last 2 candles. Okay, the reason for that is to limit your losses and lock some profits. A tight stop secures a high profitability profit, and the other to go for the big one. So you're keeping the the last 5 for a bigger, let's say, for holding position longer, and the tight one for securing some more imminent, let's say, profits. And it limits your profit, your limits your risk as well. So here is an example, an old one. I mean, it's back to 2020s. It's just one I find very good one that I found in order to demonstrate this strategy. So look at that. Remember that a must, right? I should have put the rules at the left-hand side, but nonetheless, oops, maybe, yes, this is what I'm gonna do. I'm gonna put it on the, can I? We're gonna have them. Yeah. Okay. Gonna just minimize it a bit. Just to keep it over here and reminds you. First of all, we put the 7 simple moving average. We put the RSI with the 7 period setup, okay? We set our lines at 35 and 65, our RSI barriers at 65, 35 and 65. Guys, so many of you, can you provide a sample? I can't hear you. Some are saying that you cannot hear me. Some are saying that you cannot see my screen. Please. Shall I switch on and switch off everything again to make sure that you can? I don't know what to do, guys. I switch on and switch off everything. I switch them off and on. So hopefully you can see right now. There's some people only. Moses. Moses is struggling. And it was so Joel. Moses and Joel. Okay. Apparently it might be on their side. Nonetheless, so remember, we put on the 7, we put on the 7 simple moving average, the RSI, we fix the ranges over here, 35 and 65, and it's good to have a line at 50 as well in order to monitor the 50 the 50 level, 50% level in RSI, okay? And if you spot the price moving above the 7 simple moving average, and I'm not referring only to a crossing above it, the following candle ideally should be also closing above the moving average. So the confirmation came here. This is where you should enter your long position if and only if RSI is in line with this bullish signal. So RSI should be above 35, pointing higher. So let's check. It already crossed it, and the slope of RSI keeps pointing higher. So check, we are above 35 and pointing higher. We are price above 7 and for 2 consecutive sessions. So we are good to go. We are good to open a long position. And remember that the second buying, okay, or if you want to add or your existing position should be when you see RSI crossing above 50. So RSI confirmed crossing above 50 in the next session. So over here, you can consider a second position or to add to the existing. But remember that for the second position, the trailing stop loss should be based on the lowest low of the last 2 candles. So in this case, the last 2 candles are these 2. The lowest low is here, right? Okay, in this case, we cannot see all 5 previous lowest lows, but it's still somewhere close to the second one, to the lowest low of the last 2 candles. So very, very close to each other. What else? What else? So also regarding regarding exiting a position. We didn't mention anything regarding closing the position, right? So ideally, you should close your position. Basically, you can with the target levels, you are more free to apply your own take profit strategy. Okay, you might consider using your risk and reward ratio based on your risk and reward ratio, or an extra indicator. Maybe you use as target the multiples of ATR, or simply an exit point will be a retest of the 7 moving average. So over here, it touched it. It didn't broke it, but it touched it. So this could be an exit point, or if you want further confirmation, then you need to wait for the candle to close below the 7 moving average here. Or if you have used, like our strategy saying, the trailing stop losses, then it will close automatically without any problem. Okay, everyone is okay so far? If you use trailing stop losses, it will close automatically. If you don't want to, you can close the session and take your profit as soon as it retests the 7 period moving average. Of course, if you also have the RSI falling below 65. A more reliable closing will be if you see the candle closing below the 7 moving average. So yeah, that's our very first strategy. I have another example for that strategy. Basically, it's the same example, but you're gonna see over here literally how the trailing stop losses moved. This is the automated trailing stop losses, the two that we have applied on the first position, the second position. And you see how they move along with the price, right? And over here, because the second position, the stop loss, the trailing stop loss for the second position is very tight. You can see that it closed over here. Basically, it closed here. For the second position, it closed in the following candle automatically. That's why trailing stop loss are very good, very good. They lock you profits, limit your risk. You are confident and you are relaxed that whatever happens to the market, it will be automatically closed. I mean, you don't have to worry about it. You don't have to observe it all the time. You don't have to have your PC on and watch it again and again. You don't have to. You have your stop loss. It's a trailing stop loss. It's moving along with the trend. So okay, so of course, if you put your stop loss far away and you don't go in line with what the strategies suggest, which is one tight stop loss and one of that is quite lower based on the lowest low of the previous 5 candles, and if you put your the trailing stop far away, then there is to suffer major losses. But this strategy has built with this way. You can do some variations, but make sure that you test them first. Test them. Okay, so here is another example. Let me just, I want to check something. Okay, this is another example. Same year, but later on. It was back in September and October. So same mentality. 7 moving average, 7 RSI. Look at this beauty. A strong candle. It wasn't weak. It was a strong one. Not
massive one, but a strong one, reverting all the losses that we have seen the previous day. But the following candle was huge, strong. So you see how important is to have a strong candle that indicates a nice basically that indicates the continuation of this momentum for few days, and indeed that move lasted for 1 2 3 4 5 6 7 8 9 10 days, 9 days basically. The 10th was a bit dodgy. So full body candle, strong candle, breaking 7 RSI, the 7 moving average RSI breach 50 actually at that point. So you could have taken already the position. And basically by entering either on the closing over here or on the opening the next day, you could have seen that you could benefit this. Let me just draw it because I don't think it's visible enough. You could have profit these. Why? Because over here in this example, I put the targets based on the risk and reward ratio and not based on a closure below RSI, not with a trailing stop loss. So it's up to you to see which approach you prefer. Okay? So these are fixed targets and fixed stop loss levels. No trailing stop loss levels, just based on the risk and reward ratio. So you can see that the position remain open even with this swing low. It held open until the asset kicked the target. Okay. So also the stop loss in this case was the lowest low, but not based on the week lowest week, but based on the body of the previous 5 candles. So it was here. What else? Yeah, that's pretty much it. And an extra position was taken at this level over here because we had another crossing above the 7-day moving average. We was in line with the RSI as well. So and at the basically you can, in this case, you can add on your existing position instead of taking a second position. Yeah, so that's pretty much it. Second setup, second strategy, using Fibonacci's. Now, my dear friends, okay. Now, my dear friends, Fibonacci's. Remember, I don't know how many of you are familiar with Fibonacci's, but basically it's a retracement pattern, right? Remember that it helps you identify support, resistance levels, possible reversal levels, and its setup involves the 23.6, 38.2, 50% and 61.8 Fibonacci ratio. These are the classic ones, are the ones that could be the default ones. Okay, so a move above the 38.2 Fibonacci level indicates a bullish signal. 50% moving average can be used as both support and resistance level depending of whether it's crossed below it or above it. 61.8 is the golden ratio, let's say, and it's a retracement level. Basically, it's one of the strongest retracement levels. So it's usually used for exiting a position. Okay. What else? Yeah, this is for now. Let's see the setup. So using
Fibonacci's for in your swing trading strategy. So first of all, you need to determine the trend. Okay, are we seeing an uptrend or a downtrend? Then apply your Fibonacci Fibonacci tool on your price. You can use 38.2, 50, and 61.8 pullbacks as support and resistance levels to set up a potential trade. It's also useful to use an oscillator in order to trigger the trade. Now, let's move on to see how you can implement the Fibonacci retracement strategy. You will need a 20 simple moving average, okay? And to check the trend. The 20 simple moving average basically will help you to identify not only the direction of the trend. The direction of the trend is pretty much obvious by watching just the chart, but mainly the reason why we use the 20 simple moving average is to spot the slope, because the steeper the slope, the more the life expectancy, let's say, of the trend. The narrower the flattened, let's say, the slope of the moving average, that means that the trend is running out of steam. It might be near its end, so it might not worth the effort or of taking a trade. So you've spotted the trend, whether it's an upwards or downwards, whether it's a strong one or a weak one, and then you measure the pullbacks from the trend using Fibonacci's. So once you put your Fibonacci on, you try to observe the price structure, okay, in order to find out whether there is further upcoming movement coming or whether it will stop there. Also, you need to check your oscillator. It doesn't matter if you're gonna use stochastics or MACD, up to you, totally up to you, as long as it's an oscillator, okay? And you need to check whether it gives you a signal that is in line with your trend and with your Fibonacci level, okay? You can put a stop loss, you can use a trailing stop loss with the ATR at 10 or 1.5 times the ATR, okay? ATR or 1.5 times the ATR. The strategy suggests, a particular strategy suggests that it's wise to use the 1.5 times ATR. Okay, so let's do it. Let's see, because otherwise you will not be able to understand, and I will put the steps at the side as I did before in order for you to, to follow me, to be able to follow me basically. So what we have, first of all, we apply the 20-day moving average, right? So this is with a green line, right? And we need to question ourselves. Where are we? What kind of trend we have? Okay, so we had a downtrend initially, but currently we are in an uptrend, right? Perfect. So we are in a clear uptrend, right? And it's not only clear in our own eyes, but it's also clear because the price moves above the simple moving average, right? Right. So now you can apply Fibonacci levels. We had 2 swings, 1, 2. So we have applied 2 Fibonacci levels. Okay? Clear so far? Hopefully it is. Now, let's move on. Next.
sorry. Okay, now what we're doing next, where is the lines again? Okay, come on, steps. So we have put the Fibonacci's to measure, right? And we need to question where we're standing right now. So the price right now is at 38.2 Fibonacci level, right? 38.2 because it was done in a vice versa scenario. And the stochastic over here is at 76 and 66. Basically, we had a bearish cross over here, so it's pointing lower. So there is some bearish movement, bearish signal. The slope is not so sharp, but we have a bearish signal from the oscillator. However, the fact that the price remains at above the 38.2% and also above the moving average, it doesn't take any action for the time being, okay? An entry point could have been set if we have seen a confirmed closure below the 38.2 Fibonacci level, or a break and move below the 20 period moving average as well. But yeah, in this case, at least in order to enter to open a short position, we need a closure, because this is not closed yet, it's just retested it, but then close it. At least to close the session below the 38.2 Fibonacci levels, okay? So that's not a great example, I know, but I have another one which will be even more useful than this one. Here it is, euro dollar again. Okay, we have put a Fibonacci on this long-lived uptrend, sharp uptrend, bottom, the very top, and the last swing retracement, it wasn't a swing, the last retracement that we saw was that one from the top to this bottom. We have to apply a second Fibonacci level, right? So in this case, we can see that currently our euro dollar not only corrected below 61.8 Fibonacci level, but actually broken 50 and even the 38.2 Fibonacci level, and is below it. So it closed below it, right? And also closed below the 20-day moving average. Look at that. So this candle, strong, nearly full body candle, below retraced from 61.8 and closed below the 38.2 Fibonacci level in this near-term Fibonacci level. And if I consider the long-term Fibonacci level, it closed also below the 23.6 Fibonacci level. So this is a clear short position, right? With a target, the next Fibonacci levels, so 38.2 in the long-term Fibonacci, in the longer Fibonacci, in the long-term Fibonacci, and the 50%, so that would be at 1716 something. I cannot find the exact, but here it is, the purple one, purple, two potential targets with stop loss, either the previous high, right? The previous high over here, or you can use your ATR. I don't have an ATR over here, but multiply it by 1.5 in order to have 1.5 times the ATR. Okay, let's have another example which has ATR as well. So this is Apple. Okay, this is Apple. A long Fibonacci because we had been in a long uptrend, right? We have a sharp swing lower. Currently is consolidating. So here we are. Is consolidating at 23.6 Fibonacci level of the long one, okay, which is very, very close to the 61.8 Fibonacci on this retracement. So where our asset standing right now? It's over here. Can you see that? Let me zoom in further. Here it is. You can see this is the latest candle. The latest candle is above the 23.6 and above the 61.8 and above the 20-day moving average as well. So obviously we need to wait for this candle to close. But if this candle stays and closes above the 23.6, the 61.8, and so it means the 20-day moving average as well, that suggests further bullish momentum, right? Further bullish momentum. So in this case, we go down and checking our oscillators. RSI has flattened at 60. That should be. Stochastic is at 2.48 and MACD is positive, even though there is some weakness over here. So a positive closure, okay, will indicate a long position with ATR 1.5 times the ATR. So that means 245 multiplied by 1.5 times. I think that's approximately 320, 3.20. So that means it should be somewhere. I cannot see the precise numbers over here, but I think it's somewhere here. Okay, somewhere here. That's the stop loss. Okay, and the target will be the previous ceiling or double the ATR, or but based on the strategy, you should use the Fibonacci levels, so that indicates to this direction. If in case if you had for any reason spotted, let's say, let's assume that we didn't knew about any future any pullback, etc., and we had this long uptrend. We have applied our Fibonacci, and we noticed that this huge daily candle, it was, so you can see how big it is, right? That's clear, right? Not only reverted the price away from the high areas, but also crossed below the 23.6 Fibonacci level, and it closed below the 20 simple moving average as well. So this is where a short position should be taken. And if you notice, the RSI over here, no, actually in the RSI is still pointing higher, MACD still rising, so oscillators with, sorry, how if I see it? No, I should draw a line basically, so we can see. So here it was boom, 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 boom. So stochastic MACD over here, it clashed. Yes, RSI was at 50 level. Yeah, so it was at 50. So they started getting weaker. The confirmation from the oscillators came the next day, but this was an indication to take a short position with targets the following Fibonacci levels. So that's 38.2, that's 50%. Okay, you can take this as potential targets of your short position, and ATR should be 1.5 times, the stop loss should be 1.5 times the ATR. So in this case, back then, let's assume that we're taking the position the day after, right? So that means, come on, that I cannot find out. Sorry, I cannot see the ATR. But yes, you can do the math and find out. Let's move on. That's another example. Okay. It's if I'm not mistaken, this should be. I don't remember what I put on. I'm sorry, I don't remember. It was an Apple. This is not Apple, but nonetheless. Clear uptrend, asset above, keep moving above the 20 moving average. So it seems that there is no indication for either a reversal or either a continuation of the trend yet. But in case that you have a break of the previous high and the oscillators are in line with further bullish bias and a further upwards move, you can consider the previous Fibonacci levels as your immediate support levels, so as your potential stop loss levels. Another one, that's a Pepsi. Okay, we have been in an uptrend, we've seen this pullback, so you can use the pullback, and as soon as the price gets back above the 20-day moving average, okay, that is a net entry point for a long position. If you miss that or you weren't sure about it, you can wait for a move above the 61.8 Fibonacci level. So another, either a second position or adding to the existing, or if you missed the previous, you can enter a long position over here as soon as you see the move above the 68.2 Fibonacci level. Okay, moving averages keep pointing higher and higher, it's clear, with target the previous high. Okay, target 1, it will be the previous high, and target 2 will be the Fibonacci extension, right? Target 1, target 2, and where you should place your ATR? 1.5 times below your entry. So at that, at this over here, it points that the position was taken here in this doji candle. I disagree with it. It's wrong. It should be taken as long as we had this confirmation. So here, ATR was at 230. So 230, 230. That's $3 lower. So $3 lower suggests that the stop loss should have been somewhere here, somewhere close to the 38.2 Fibonacci level, either in a form of a trailing stop loss or a fixed one, up to you. Okay? Okay, so far. Oh, good. Shall we move on? We have just covered, and that is an extra one and an extra one. Look at this beauty. Another Fibonacci on the pullback, on this pullback, just to find out an extra position or a new position. Okay, so as soon as you see a break of the 50% or the 61.8% Fibonacci level, as long as also the price is above the 20-day moving average, so you can consider taking a long position with the Fibonacci extensions of the new Fibonacci level, right? Okay. feel free to see all these examples later on when you have a free time. Here is a combination of Fibonacci's with a pattern, with a channel basically. Channel, after this drift, the asset was moving in this channel, right? So at some point the price crossed outside the channel, right, above it. So you can see that it broken the uptrend, the upper line of the channel, and also it broken the previous high, actually all three previous highs to be more wise, and it closed above them. So it broken the trend line, the upper trend line, the three previous highs, and also the previous 38.2 Fibonacci level. Look at that. Close on it basically. So that was an indication of a long position with potential targets, the previous Fibonacci's, right? Or you could have used the new Fibonacci levels on this pullback and use their extensions instead. Usually they are in line with the previous ones. So you see the 161.8 Fibonacci extension is very close to the previous 50% Fibonacci level. So target 1, target 2, and if in line, the asset remains in line with the a direction higher, potentially that could be another potential target. So let's move on. Parabolic SAR and MACD, this combination. Okay. Sorry. Parabolic SAR. So if you are in a downtrend, parabolic SAR will be above the channel. If you are in a downtrend, the parabolic SAR will be below the candlestick. Sorry. If you are in a downtrend, it will be above the candlesticks. If you are in an uptrend, it will be below the candlesticks. A reversal can be spotted if the parabolic SARs change direction. Okay, it's a good indicator. Parabolic SAR might be one of the best indicator for market swings. Okay, especially short-lived ones. But it's a bit aggressive and it's a bit fast. So yeah, sometimes basically it goes in line with the short-term, very short-term swings. So even though, look at this for example, even though we have an uptrend, right, from here, we had an uptrend started here, basically started here, but a bit of consolidation follow, but nonetheless, we had an uptrend. That was the beginning of it was here. However, we have seen some ups and downs of parabolic SAR before it settles at the below the candlestick. So there is a so there is some, because it's a bit too aggressive as an indicator, is wise to use it to have an oscillator as well, to combine it with one more trend direction tool, which is the MACD in this case. So how you can treat it? So as we said, if we have a downtrend, right, the parabolic SAR should be at the top of the candlesticks. So here we have an uptrend. But we started seeing the parabolic SAR coming closer and closer to the candles until we spotted the very first one that it was below the channel, indicating that we might see a reversal, right? And indeed we saw one in the next following candle. So for 3 consecutive sessions, we have moved
three consecutive moves higher with parabolic SAR this time over here. You see, the fact that this has a lot of distance from the actual candle indicates that we have a new trend, and this time is an uptrend. And also confirmation came with the fact that histograms in MACD move above the signal line. So this is a bullish signal. Bullish signal over here, bullish signal over here, that is calling for a long position. If you're not sure, wait a bit for the next following candles, for the next candle, or okay, this case, the next one was a bit dodgy, so it wasn't reliable. But the third one is a very big candle that if you weren't sure about this one, you can be sure with this one. So this is another entry point, okay, over here, following a long position. And at this point, you can see that MACD also started turning positive. So that was another indication of a long position with targets, okay, with the targets. Either you can use your previous lowest low, you can use ATR, you can use Fibonacci, you can use risk and reward ratio, or you can just wait to see a change in the parabolic SAR. So as soon as you see the parabolic SAR changing direction, you can close the position, right? A good stop loss, by the way, is on the actual moving average, is on the actual parabolic SARs, okay? A good stop loss level. Or you can use trailing stop loss level, okay? By measuring, as I said, the ATR or risk and reward ratio, or putting it at the previous latest low. So in this case, we had a nice floor over here for 1, 2, 3, 4 consecutive sessions. Now, short position. As soon as we see our parabolic start changing, you see it over here, and over here you can open a short entry and closing your long entry without here waiting for confirmation. Why? Because parabolic SAR was already far away from the candle. If the parabolic SAR is far away from the candle, that is a strong signal that there is a strong momentum and a strong trend. The closer the parabolic SAR is to the candle, the weaker the momentum is, and the most possible the reversal will be. But if it's a far away, that suggests a strong indication. So feel free to consider taking a long position without a short position, without waiting for a confirmation, because in this case we had the parabolics are way far away. We had already 3 consecutive bearish candles. We had already seen the histogram moving lower and lower. So that was quite a confirmation wasn't necessary, especially from these 3 consecutive bearish candles. So short position over here. If you missed that, the next bearish candle could also be a nice entry point. Target level, you are more free to use your own exit target strategies in this example. If you're using I don't know, you might use pivot points, you might ask to find out your targets, you might use your risk and reward ratio, you might use, I don't know, previous highs, previous lows. Feel free. But as soon as you see your parabolics are changing, okay, or in this case we didn't have to wait for the parabolic SAR because we have seen the asset struggling to extend lower for 3 consecutive sessions.
until it started moving higher with the parabolic SARS turning below the price. So that was enough in order to close the position here or even here. You didn't have to wait this big candle because you already had seen a rebound and you already had seen that the MACD turned negative. Sorry, not negative. The signal line, the histogram was negative, but the signal line was delayed a lot. It was still above the above zero. So also there are many basically. This is not wise. This is not wise because they are flattened. You see, histogram is quite flat, so that suggests consolidation. Over here, the RSI, the parabolic SARS were very close to basically the parabolic SARS over here were wrong because the price was turning lower and lower and lower, but instead we had seen the parabolic SARS being, instead of above the candlesticks, below the candlestick. So that suggests stay out from the market. Don't take a position. You see that? The price was dropping, right? But the parabolic SAR were below the candles instead of being above the candles, right? Here as well. 1, 2, 3, 4 consecutive sessions, they were moving higher, but the parabolic SAR was above it. So let's suggest don't take the entry. And all this period, we have seen choppiness in MACD as well because the signal line, the red line, was a bit flat. It didn't have a strong slope. The slope should be clear, should be point upwards or downwards, upwards or downwards. If it's quite narrow, don't take the entry. Simple as that. Look at this beauty. Clear, positive MACD, strong slope pointing higher, clear parabolic SAR, right? Clear higher highs. If you want to apply a moving average as well, just to feel more confident, do it. Do it. Okay? Take a profit as soon as you see parabolic SAR turning on the other direction. So guys, these are some rules for parabolic SAR and MACD. I think I'm gonna keep it short and I will continue with part 2 next time because we cover only 3 and we have been here for 1 hour and 40 minutes. Okay, so I'm gonna keep it short and I will continue with the second part in November, if you are okay with it, because I understood that you're already tired as well, so I'm gonna call it short. These are some important rules for parabolic SAR and MACD. So always wait for a crossover, always. If parabolic SAR has also switched position on the chart, and then you should place a buy stop or sell stop order above the high or the low of the candlestick. So look at this, some nice pending orders that you might consider in order to automatically open a position without any hesitation. Your stop loss should be placed below the low or high of the that candlestick. And to exit the trade, you can either use the parabolic SAR or any other indication. Don't use MACD for taking profit. Okay? So you should either use the SAR signal in combination with MACD, or the SAR as such, but never MACD on its own, okay, for taking profit. Okay, guys, I'm gonna keep it here, okay, because I don't think we will manage to see all the rest that I have saved, okay. I'm gonna keep it for the November's schedule, and I will add to it. So we have left 2 behind, okay, the 4th and the 5th. I'm gonna add some more so we can have another 3 or 4 next time, and more advanced ones. Thank you very much for watching. Hopefully the session helped, okay, to see the charts with the same different, from a different side. Any feedback is more than welcome. Please email it to me, webinars@igfm.com, and the support team will assign the ticket to me in order to see your feedback. Your feedback is very, very, very important for us. So please, please, please don't forget to send your feedback and let me know what you need, how we can improve in order to meet your expectations. Thank you very much. Have a great day ahead. Take care. Sorry, I'm running out of steam. And we're gonna see you later on. Basically on Friday, we have the NFP live. Don't forget that. With Michalis, with my colleague Michalis. He will cover the NFP session. So join us in Facebook, the YouTube, Twitter as well. Join us, come, let us know which assets you want us to analyze, let us know anything that you're struggling with, and we will try to help you as much as we can. Thank you very much. Have a great day ahead. See you again later. Bye-bye.